Hello and welcome to my daily Forex market review. My name is Derek Shemming, and this review is for Wednesday, February the 13th. Starting as always with my currency strength index, you can see that the day was a little sloppier, not quite defined, or not seeing what I would consider clear and consistent divergence between the major currency pairs. Now, of course, every day can't be a sweet, clean, divergent day. As a matter of fact, that's the whole premise and basis of creating this tool several years ago, in order to be able to see where the strength and weakness is in the marketplace, and being able to identify days when it's just not so clearly defined. As traders, we have to have the patience and discipline to wait for the better opportunities and look at the things that sometimes may not be on our path, or our normal path, as I should say. You can see that from the rollover period going into the Aussie and Tokyo markets, that the Aussie itself was the strongest single currency. Those who trade the Asian time frame saw that the Aussie pairs were moving to the upside. You also had the yen moving to the upside. So if the two preferred or two major Aussie dollar pairs are in fact the Aussie dollar versus the US dollar and the Aussie dollar versus the Japanese yen, obviously with the yen moving up and the Aussie moving up, the more desirable situation was Aussie opposing the dollar. And you can see the dollar down here in the green, commingled with all the other currencies trending down. So look at your charts. Compare your Aussie yen to your Aussie dollar, and you will see a significant difference between the dollar opportunity and the yen opportunity opposing the Aussie. This is a dramatic example of why this chart is so powerful and why we use it. Moving through the day and going into the London session, you can see that the yen, as we approach the London Open, you can see that the yen topped out, and it gets up here to a plus 41 reading, plus 41 again. Again, that's not the most extreme level we would like to see, but it is beyond what I would consider the minimum threshold for attractiveness in this view. So we get into the London markets though, and what do you see? The yen starts trading down, starts losing its momentum as the London markets open. The Aussie was very flat by that time. It had already made its move and started moving sideways. What really stands out is not only was the yen trading down, but you can see that the euro was trading to the upside. So your best opportunity, again, look at your charts, your best opportunity during the London session, in retrospect, it's always easy to see this in hindsight. This chart, this simple overview of the market, helps us anticipate what's happening so we can actually react and take the trades. And this is showing us, and it's showing us early on, just after the open, that the euro was starting to gain strength and the yen was starting to see some weakness. The pound actually moved down. The pound was the most significant mover to the downside. So you had the pound moving down as well. Now, but again, if the pound's moving down and the yen's moving down, is that an attractive situation? And the answer is no. You need the two currencies of your pairs moving in opposite directions. So again, to utilize my currency strength index properly, it is what is moving up and what is moving down and what's moving sideways. And is taking your strongest currencies and your weakest currencies and finding the pairs out of your short list, the pairs that you prefer to trade, and creating a focus list of the 1, 2, 3 pairs that you're going to focus on in that segment of the market because of their activity. So coming into London, it is the long euro yen that became the best opportunity in the marketplace. We get into the New York time frame, we start approaching in New York, and you notice that from London, the dollar hit its lowest point back here when it was at a minus 16. Now, minus 16 is pretty muted, and the dollar has not been the strongest currency by any means. As a matter of fact, since the new year, I would suggest that the dollar has actually been fairly lackluster. But you can see that the dollar was slowly but surely climbing. As we approach the New York Open, then instead of being at a minus 16, you've got the dollar at only a minus 6. Still, it's moving up. Just because it's a minus 6 doesn't mean it's going down. When it was a minus 16, it's actually improved by 10 points. Again, that's a pretty minimal move, but it's a step in the right direction. At the same time, the pound is moving extremely powerfully to the downside. And so we have an attractive situation looking at the pound short, and then what can we team it with? You have the Swiss moving up, you have the dollar moving up, dare I say the euro moving up. I'm not a fan of trading the euro-pound pair, but there's clear divergence between the two, and for those who like to trade that pair, I'm reluctant and choose to use it as an indicator, not a trading tool, because of the correlation that's typically exhibited between those two currencies, and the fact that it just lacks any real trading range makes it very difficult for a trader. So again, this drives home the reason that we utilize this chart. And remember yesterday something very unusual happened. And if I scoot this chart back, and I don't want this video to run into too much time, each day the chart zeroes out. So if I go to the prior day and we bring this on, I want to remind you of the major move that the yen put into the upside. Now the yen made this move. As it scoots back, the yen made this move after we saw all types of news reports out of the Bank of Japan, out of the United States, saying, oh, we're all very comfortable with the yen having weakness. We're all comfortable with what the yen is doing. And I say poppycock. This move here that took the yen, and this is a significant event in the marketplace. I alluded to this yesterday and pointed out to you the yen was at a 9, and within a very short period of time it's at a 91. This did not happen on the back of individual traders. This is a substantial government, central bank, or institutions. I don't even think it could be institutions. I'm going to suggest that a central bank like the US or the Bank of Japan has stepped in and said enough is enough. Why else would they report to us that they think it's okay for the yen to drop? That's just ridiculous to assume. There's not one multinational company headquartered in the United States that wants the yen to continue to drop. That's just crazy. And over the last 6 months, that's exactly what we've been seeing. So I think yesterday was a significant event, and it may spell the end to the continued decline in the value of the yen. Now, I may be wrong. I'm not sitting here trying to predict and tell you that the yen's only going up from here. That's not my job. And that's not your job either. And the problem is traders are so busy trying to predict and forecast what's happening in the marketplace that a lot of times you're too stubborn to actually recognize and notice what's really going on. Your job is to anticipate. Your job is to look at the possibilities, be prepared to act, and then act on it once you see it happening. Save predictions for analysts and the weatherman. I'm a trader. I have to consider what may happen, and then I'm going to trade based on it happening. Not my belief, not my hope, not my prayer, and not my stubborn attitude thinking it's got to happen. Nothing has to happen. Something's going to happen. As I say, they can't go sideways forever. They can't move up forever. They can't move down forever. Anticipate the possibilities, react to reality. If I taught you nothing else in your lifetime, if this is the last thing you ever heard me say, please take those words to heart. Now let's look again at the euro-yen. The euro-yen is continuing to put on a significant event up here by being at the top of what I think is potentially maybe the end of this crazy rise, this above average rise that it's been seeing over the past 6 months, and 6 months plus now. Time flies. So we look at the trend line. You can see as I quickly put these markings up again, just as I did yesterday, you look at this and see how the trend line, what was the trend, we talked about this in prior videos, that it broke trend. It came below what was support. There's even support as it was breaking it. Remember, when we trade through support, typically it becomes resistance. We trade through resistance, typically it becomes support. Ideally it would. Well, what did it do? It became resistance up here. And this is exactly what I've been alluding to. Then you team that with the yen doing something completely off the map yesterday. There's a shift happening. I do anticipate that we're going to see a bigger drawdown in the euro-yen pair. I'm anticipating and eager and very much welcoming it. But if it wants to go back over 126, it wants to keep trading higher, it wants to go back up to 127, by all means, I'll go long. I've been making long and short trades on the euro-yen all this week. To look at this in a little bit more detail, we can come over, and this is just looking at the last couple of days. Matter of fact, I could throw the pivots on here real quick so you can see the pivots, because the pivots and the figure have obviously been in play on this pair. So as we look at the pair today, and this is going back, I've got February 5th and 6th on here. Remember, this is the 127.70 move. This is that 1, 2, 3 topping pattern that it set. This is where it broke trend. This is the divergence down here. I marked the divergence yesterday and showed you. Last couple of reviews, we've talked about the divergence after it saw about a 430 pip pullback from the high. That was the pullback. The buyers are still there. The exuberance to take the euro yen long still exists. But yesterday really was a game changer. The sharp decline in the euro-yen pair yesterday in of 170 pips in 5 minutes to the downside on the euro-yen. I think the pound-yen was even a little bit more than that because of the divergence between the euro and the pound. I mean the yen and the pound. Something changed yesterday. Now again, I'm not predicting a free fall to the euro-yen pair. I'm anticipating its possibility. There's clearly its broken trend. Clearly it's in transition. Clearly it has been consolidating for multiple days now. Clearly it has been producing long and short opportunities and trading off the ranges of 127, 126, 125, 124, and then that low 123.50 range. So your high end's 127.70, your low end's 123.50, and the substantial, the figures and the pivots inside of there have been providing both support and resistance. So today, what happens today? Today's trade was taking the euro-yen short as it broke the 126. Took a trade at 126.02 with the anticipation it could break the figure, it could break my D-line configuration, it could break the pivot point that was just below the 126 figure. And that's exactly what has happened. It's actually been a good trading day. So again, I'm not saying this thing is just going to go straight down. I'm saying it's getting more and more likely that that is going to be what happens. The buyers are starting to change their mind. When we're in transition, when a pair consolidates, when a pair stops moving up or down and sets a support or resistance level, that is a collision of buying and selling activity. If it was overwhelming buy, it would move up. If there was overwhelming sellers, it would move down. We are in a very choppy transitional period in the marketplace, and where it goes from here, we will see. As a trader, I have to look at both possibilities and act and react to what's happening. I keep saying it, and it is the fact. It is a major lesson for you to take to heart. And again, I've been doing this for over 2 decades. I can tell you that most traders, yourself probably included, are too damn busy trying to figure out what they think is going to happen. And sometimes, unfortunately, you miss the fact of what's really going on until after the fact. It's easy to trade from the right-hand side of the chart. It's more difficult to trade from the left-hand side of the chart. It's more difficult when you're trying to predict, but when I'm anticipating the possibilities and reacting to the levels I'm looking for in the situations that need to set up for me to take a trade, then I can see some much better behavior and much better trading opportunities. Looking at my established zones, this is a range that works very effectively for us, and you can see even the zones are crossing and crisscrossing each other. They've collapsed and come together. In a zone lesson, I would explain what this means, and there is a significance to this. A little bit of uncertainty of the market in a nutshell is what that is. And let me explain this to you as well. Sometimes the best trade you can make is not making a trade at all when the signals aren't clear. You do not have to always be in a trade. And quite frankly, we take calculated risk. We make very few trades. This week alone, here as we finish the New York session on Wednesday, I have only placed 12 trades this week. 12 good decisions that have made me money. Of the 12, there was one losing trade. I'm not perfect at this. I'm better than average and very consistent, and my approach is proven. Proven doesn't mean flawless. Proven doesn't mean perfect. Proven means that on the balance of things, my approach works and makes me money. It can make you money too. You can come into our trade room, you can work with us, trade with us, learn from us, and even take trading classes. I make this offer on a daily basis. Send me an email to DerekSchimming derekshemming@gmail.com. I don't have to spell it, it's at the bottom of this video. Give yourself the opportunity to see a real way of doing this from someone who's been a professional trader for over 2 decades, who has taught more people than you know. I like sharing the knowledge that I have and helping other traders arm themselves to approach the market in a more reasonable fashion. If being more consistent, if learning how to be more patient and disciplined, learning the difference between anticipation and prediction, and learning some simple proven strategies to help you do more and make more by arguably looking at less and taking less trades. If that interests you, you need to send me an email. Fill out our simple questionnaire and we'll have you in on the floor. Again, I hope these videos are informative. I hope you find some real benefit in hearing what I have to say and looking at the market. But you know what? These are in hindsight. I'm looking back at the day and reviewing it. Largely, in fact, this is for traders that are with me to review the day. But for those who aren't, you do have that opportunity. So take me up on it. derekshemming@gmail.com. As always, you guys have a great day trading.